Metals are up and about, and it's a shining bright day for the metal names, and this is led predominantly by the commentary from the steel secretary in an exclusive interview with CNBC TV18. Now, the secretary told us that a decision on the safeguard duty on steel is expected soon, this even as he sees supply expanding ahead of demand in the next 3 to 4 years. Listen to what he said first before we go across to Nigel.
On the safeguard duty, as you know that there is a process which was conducted by DGTR, and on the recommendation of DGTR, the provisional duty was imposed, which was effective till early November, 6th, 7th November. After that, the provisional duty has lapsed. However, DGTR has also recommended a safeguard duty for 3 years. Which is under consideration with the government, so we can expect a decision pretty soon. There have been decisions to relax some quality control orders on BIS standards for a specific time. So for some standards, we have suspended the QCO for 3 years. For some, we have suspended the QCO for 1 year. It's also, for example, that in specialty steel, since we don't have production in certain grades and specialty grades have to be imported, so we have suspended the QCO for a year. And we hope that the domestic capacity will come by that time. So it's basically to balance the interests of both steel industry and the consumer industry both. Short term, there may be some stress on demand-supply ratio, and we may have more supply than the demand for next 3 to 4 years. But I expect that the demand will catch up with supply as we move forward. So to answer your question in last one line, yes, I expect that the demand will continue to rise between 8 to 10%. The steel prices right now are at quite low level, and as the demand increases in coming months, I would presume that 26 the prices would stabilize.
All right, that's the word coming in from the steel secretary. But Nigel is joining us too. Nigel, what are the other triggers for the industry, and also what did you make of the steel secchi comments?
Well, the big question is why are metal stocks up? There are two big factors, right, at play today. Expectations of Fed rate cuts, well, they have moved up in comparison to the past week. And fresh commentary that came in from the steel secretary who spoke to us here at CNBC TV18 exclusively yesterday. First, let's address what the steel secretary said, right, with regard to the protection measures. Remember, this provisional safeguard duty expired on November 6th, which means, as of now, there's no safeguard duty in place. But the secretary assured everyone that the government decision on reinstating the safeguard duty is expected rather soon. So it's giving hope out there. That's actually a bit of a delay, but it's likely to come about. That's the hope that the street is clinging on to. He added that adjustments in the BIS norms as well as the quality controls, well, they are aimed at balancing the interest of both the steel producers as well as consumers as well. So he clarified on that protectionist stand that the government has. But you'll be asking me, why is the safeguard duty important right now? Few factors. Point number one, China's output is down. We all know that. Year to date, it's down. But exports still remain high, and Chinese exports are continuing at around 10 million tons on a monthly basis. That's a worry, because elevated exports means more Chinese steel in the global markets. That's what will put pressure on prices. Second point is domestic prices, well, they are now at par with imported steel. But if you get that safeguard duty at around 12%, then it makes domestic steel far more competitive, as it makes the domestic steel price 12% cheaper than that imports that will come in from China, and 8 to 9% cheaper on those imports that are coming in from Japan as well as from Korea. A safeguard duty would protect margins, support domestic pricing at a time when the global steel pricing on the whole is rather cheap. And point number three is large new steel capacities, they are coming online in India, which could create higher supply in the near term, and export opportunities, well, they have been narrowing. And with EU's carbon border adjustment mechanism, which is known as CBAM, that is likely to increase the compliance cost as well as reduce competitiveness in Europe. This in turn will add pressure on the industry to ensure that domestic market remains viable, strengthening the case actually for a safeguard duty to come in place. And finally, the steel secretary, he said that he expects demand to grow at around 8 to 10% ballpark going forward. And steel pricing, which is suppressed right now, he's expecting it to stabilize in 2026. So put everything together, the Fed likely to cut rates, steel secretary giving hope that there are duties that could possibly come about rather soon. So on the back of that hope, we have the metal index that's flying away.
Thank you very much for that. Earlier today, we also chatted with Vikash Singh, Vice President at ICICI Securities, and all these points that Nigel was talking about. Listen into what he had to say.
If we don't count safeguard duty, then there's not much difference. But assuming if the provisional safeguard duty would have continued, then you are 12% cheaper versus Chinese and 9 to 10% cheaper versus Japanese and Korea. So that's why I said we have already given away most of the safeguard benefits over the last couple of months. And currently, if safeguard doesn't come, then the Chinese would come at par and Japanese, Korea would put further pressure of 1,500 to 2,000 rupees on the price.
Get into a break. On the other side, we'll discuss market fundamentals. Rakesh Vyas from Quest Investment Advisors joins in on the other side.